Welcome to the InterMarket Analysis video update. This video attempts to look at other markets outside of the S&P 500, both within stocks and outside of stocks, to try to get some insight as to what's going on. This is being prepared for Monday, March 20th. The first thing we look at is S&P 500 valuation. Right now, the S&P 500 on a trailing 12-month PE ratio is still expensive. We have a PE ratio of 20, that's price to earnings ratio. When this is above the red dashed line, stocks are considered to be expensive. When we drop down below the red line and go all the way down to the blue line, stocks are considered to be fairly priced. And when we go all the way down to the green line at a PE ratio of 10, stocks are considered to be cheap or inexpensive. Down on the bottom, we can see the spread between the current price of the S&P 500 and the top of the PE ratio 20, showing that we're above zero, so we are still expensive. Here's a historical chart just to look at different events and how stocks were valued at those times. Another thing we look at is the variation on the PE ratio called the Shiller PE ratio. This calculates things a bit differently, and based on this, we're also expensive with a current ratio of 27.97, where the median and the mean tend to be between about 16 and 17. Now, the market doesn't use trailing 12 months or past data. They look forward. They look at earnings forecasts and projections and then base a PE ratio on that. As of Friday, the S&P has a PE ratio looking forward of 17.3. That's below 20, but above the 15s. From that standpoint, stocks are not considered to be overvalued. Just for comparison purposes, here's the mid-cap index, which is down at 12.9, and for small caps at 12.8, also considered inexpensive on a forward-looking basis. Another area that we look at is growth and value. Growth still is in an overall downtrend, where value is still in an overall uptrend, but you can see a lot of weakness in value right here. When we compare the two, we're seeing growth show a lot of improvement, but it's still in an overall downtrend, where value is in an uptrend, but showing some weakness. Here's another look by showing some growth and value indexes, showing how growth continues to underperform value, but value has been making a comeback. This is an inverse of that same chart where value's been doing well, but then showing some weakness. Another look is at ETFs, showing how growth has been underperforming value, but bouncing back up. And this shows how value's been outperforming, but showing some more weakness. And then the last chart just shows how growth continues to underperform, but it is making a strong comeback. Some other markets that we look at, the biggest software companies in the US are just starting to give us a golden cross. These are the real big companies which are part of the tech sector, and that could really give some support to the market. Also, we look at the CRB monthly index, which is still in an overall uptrend, but starting to come back down. At the bottom, we look at a ratio between inflation and deflation, showing that inflation is picking up, but we're still below this moving average. And the moving average itself is declining. Another measure of inflation is the Baltic Dry Index. How much does it cost to ship products from one point to another? It's still in an overall downtrend, but has been poking its head back up. The CRB Index, another measure of inflation. We had a recent death cross, and we are showing some weakness. Corn has also been coming down from higher levels, as well as aluminum. Heating oil has also been coming down, as has gas. Natural gas has also been going down. Oil has dropped below 70, we're at 66.93. Diesel has also been coming back down. Wheat has been coming down. Fertilizer has also been coming down. Lumber, after going sideways for a lot of 2023, is now starting to go back up. The dollar index is still in a downtrend with the recent death cross and bouncing right around the 103 to 104 level. The euro is still in an uptrend compared to the dollar. And the Japanese yen is still in an overall uptrend. Here's the British pound. Even though it's shown some weakness, we're still in an overall uptrend compared to the dollar. The Japanese yen is also in an uptrend. Copper is still in an uptrend, but has been seeing some recent weakness. The copper to gold ratio, copper's been going down as gold has really been going up. Here's that same chart, just looking longer term, where the ratio is going down, and here's the 2-year yield, and there's quite a spread between the two. Usually they don't get this far apart and they have a tendency to go in the same direction. So it's just showing some kind of an anomaly for right now that's been going on for quite a while. Gold is in an uptrend and possibly starting to break out. A lot of people that really like gold, they're all excited right now and they think this is it. Now we're going to get set to go higher. And the same thing is true with silver, and an overall uptrend and starting to break above its moving averages. Looking at some indexes, the CRB is underperforming the S&P 500, where the S&P 500 is now outperforming the CRB index. The NASDAQ 100 is still in an overall downtrend, but it is really making a comeback when compared to the S&P 500. Looking at the S&P and some other stocks, here are the mega cap growths. Not quite at a golden cross yet, but getting close, and we're seeing some recent strength. The mega cap growth stocks that we just looked at compared to the S&P 500 equal weight ratio shows that the mega caps have really been doing well. The S&P 100 has been doing well against the S&P 500, but is still in an overall downtrend. Small caps are breaking down right now. They're still in an uptrend, but we're seeing this ratio really going down. Low volatility stocks still in an uptrend, but showing some recent weakness. And here's the ratio between low volatility. It had been in an uptrend, but now it's starting to give us a death cross with this ratio. Low volatility stocks did really well in 2022, but they seem to be under pressure in 2023. The Dow Jones Composite Average is still in an overall uptrend, even though it's been showing some recent weakness. Here's a look at Dow theory, with the Dow going in a decline, the transports also declining, and the utilities had been seeing some weakness but then bounced up later in the week last week. Here's another look at Dow theory with the S&P on the top and the NASDAQ on the bottom. Not really seeing anything that's a divergence, either positive or negative currently. The FANG stocks gave us a recent golden cross and are looking better. ARK is still in an overall downtrend, even though it's been bouncing up from its lows. The high beta stocks, which outperform the market either up or down, when this is going up, that means folks are getting more into stocks. When this is going down, that means folks are getting out of stocks and usually getting into bonds. We're seeing this really decrease as we're seeing a lot of this banking problem that's been hitting the market. Here's the S&P 500 compared to the S&P 500 equal weight. The ratio is really going up, showing that the big stocks are really outperforming the smaller stocks, and that could give some good leadership to the market. Here's a look at the S&P 500 with a global ratio, looking at stocks in Europe, Australia, Asia, and the Far East. Still in an overall uptrend, starting to turn up. But on the bottom, we're rolling over a bit with the PPO, but it hasn't gone back up yet. And this is a very long-term chart. Looking at bonds and stocks, bonds have been doing a lot better lately as people have been getting out of stocks and then going into bonds as a flight to safety. We're still in an overall uptrend, but we've been really choppy lately with the bond ETF. Here's world bonds, where they're still in an overall uptrend, but they're just bouncing all around, but showing some recent strength. Here's the stock to bond ratio. Stocks are still outperforming, but we're seeing bonds start to do better, and that's bringing this ratio down. Here's looking at shorter term bonds against the S&P 500. This is peaking out just a little bit, showing how bonds are outperforming the S&P in the very short term. High yield corporate bonds still in an overall uptrend, broke out, came back down, but still showing some improvement. And here's investment grade bonds, also recent golden cross, some weakness, but now trying to stabilize. The stock to bond ratio is showing that there's a pretty strong tendency for stocks and bonds to go in opposite directions. If stocks are going down, bonds are going up, and vice versa. The Dow Jones Corporate Bond Index is still in an overall uptrend and doing much better. The 10-year Treasury yield, after really going high, has now been coming back down. We're at 3.395. Here's another look at the 10-year yield, how it's been coming down as of late. Another look at bond yields, showing it dropping below 3.4%. Here's the 30-year yield, also has been coming down lately. Looking at the S&P 500 against the 10-year Treasury yield, shows how yields have been going up a lot faster. So the S&P is in a downtrend, but it has been showing some recent improvements. Junk bonds, which tend to follow the stock market, still in an overall uptrend, broke out, coming back down, and are trying to stabilize. Here's the junk bond ratio compared to the government bond ratio, where junk bonds are still continuing to outperform, even though we've seen some recent weakness. Here is the 10-year bond, which has been going up in price, and the RSI is above 50 and advancing, and the MACD on the bottom is also showing an uptrend. Here's a daily chart of the different maturities, where we have been really going up with interest rates. Now we have been coming back down. Here's a weekly chart showing how the US, the UK, and German rates have been coming down. Japanese rates have also been coming down, even though they're still quite low. That's a special situation that we're keeping an eye on. Looking at the S&P and different sectors, we have the S&P to the utilities ratio. It's been going down. When this ratio is going up, quite often the S&P is also going up. Well, lately it has been coming down. The staples sector, which is still in an overall uptrend, but really starting to show some weakness. Here's the energy sector, which had been underperforming, then in 2021 started to outperform. Still in an overall uptrend, showing some weakness here, and could possibly see a death cross with this ratio in the near future. The tech sector also giving us a recent golden cross, and the semiconductors, recent golden cross. The tech sector, the S&P, had been really underperforming for 2022, now starting to break out, and we're seeing a recent golden cross. Looking at discretionary, the things that make life fun, they have been really underperforming the S&P. So the S&P has been in an uptrend against discretionary on the top, where discretionary starting to show a little bit of improvement here, but it's kind of mixed up right now. Then looking at energy, which had been really strong, has then been showing some weakness. The materials also in an overall uptrend, but showing some recent weakness. Financials, really weak. This ratio has really been buckling down. And I've been showing this chart in the daily videos that I produce as this banking sector situation continues. Real estate also in an overall downtrend and showing some weakness. Utilities giving us a recent death cross with this ratio, but some strength. Healthcare just giving us a death cross here. Pretty much been chopping sideways. Here's another look at healthcare, also starting to underperform the S&P. Communication is just giving us a golden cross here with this ratio. These are the big internet companies, and if these really get set to go higher, that could really help give some support to the market. Staples, we're just seeing a recent death cross here with this ratio. Industrials still in an overall uptrend, but some recent weakness. And the NASDAQ has really been outperforming the S&P 500. The NASDAQ 100 has been outperforming the NASDAQ. And then some other areas, growth, showing a little bit of improvement when compared to bonds. But with the recent strength in bonds, we might see this tick down slightly. The 10-year yield, which had really been rising, is now starting to underperform. We're not quite at a death cross yet when compared to the tech sector. And here's the tech sector, which had been underperforming, is starting to show some improvement. Discretionary, which has been underperforming staples, has been showing some improvement, but not an awful lot. The staples are still in an overall uptrend, but showing some recent weakness when compared to discretionary. The energy sector, which is really strong in 2022, is now starting to show some weakness when compared to tech. Gold is really starting to break out and is outperforming the S&P 500, and it's also outperforming the dollar. High leverage loans are starting to see some pressure. They had been going up and are a pretty strong uptrend, but if we see some problems in the economy, the fact that this is coming down and could eventually turn negative is something we want to keep an eye on. Then looking at some shorter term bonds against investment grade bonds. When this is coming down, that means fear is decreasing. When the red line is going up, that means fear is increasing. Overall, we've been going higher, so fear is starting to increase, which we're seeing that reflected in the VIX. Then our InterMarket Analysis chart, oil has really been giving back a lot of its gains going back to the beginning of 2022. The dollar is now in first place. Gold is starting to make a bit of an advance, where stocks and bonds continue to be underwater. Then another fear gauge that we look at is starting to show an increase in fear overall when this is peaking up. Then a new section, and I don't know how long I'll include this until this situation resolves itself. We'll just look at the banks. Here's the bank ETF, which just got hammered this past week. Here's a regional bank ETF also showing a lot of weakness, as well as another regional banking ETF. And then a ratio between the regional banking ETF and the financial sector shows how it's really been going down. One of the bank stocks that are in the news right now is First Republic Bank. It had been up around 115 just a few days ago. Now it's down at 23. Comparing some different indexes. Here's the Amex, the NASDAQ, and the NYSE. We take a 5-period moving average of the highs minus the lows. When we're below zero, that's negative, and that's where we are right now, and we're continuing to drop. We'll keep watching this. If we get down to an extreme negative reading, that could mark a bottom in the market. The small caps still in an overall uptrend, but seeing a lot of weakness this past week. And the same thing with the Russell 2000 small cap index. The RSI on top is starting to get extreme negative. We are right at support when you look at this chart, but on the bottom, the MACD is still in an overall downtrend. The small caps to the S&P 500 ratio is really breaking down right now. Small caps are in an overall downtrend when plotted on the Elder Impulse system. And here's the mid caps, recent golden cross, but a lot of weakness. And they're also in a downtrend with the Elder's Impulse system. The Dow is still underneath both its 50-period and 200-period moving average, but is still in an overall uptrend. The diamonds are currently neutral with the Elder Impulse system. The NASDAQ giving us a golden cross and breaking out slightly. And here's a look at the Fibonacci levels, just in case we get set to go higher. This 12,427 level may act as overhead resistance. That's quite far away from where we're at right now. Here's the NASDAQ 100 also giving us a recent golden cross and trying to break out. The Qs are positive with the Elder Impulse system. And here's the Fibonacci levels. We might hit some resistance at the 12,868 level, which was the high that we set before, right at this 38.2% retracement, going from the October low to the all-time high. We'll be watching that level if the NDX continues to go higher. The NYSE Composite, recent golden cross, but then some weakness. The Wilshire, also recent golden cross, and then some weakness. All stocks, recent golden cross, weakness. Emerging markets, recent golden cross, and weakness. Internationally, China's trying to turn back up after being in a downtrend. Emerging markets are looking a little better. Trying to turn back up in Europe. We're still headed lower in Japan, and we're also headed lower in the US with the S&P 500. Bitcoin just gave us a recent golden cross and is trying to make some kind of a move to the upside. Some correlations. The dollar and the S&P have a fairly strong tendency to go in the same direction right now. Oil and the S&P also going in the same general direction. The S&P to the 10-year correlation also in the same direction. The tech sector, the 10-year yield, still pretty much neutral. And the S&P to the 2-year yield having a tendency to go in the same direction. The home builders, we're seeing the S&P decline. The home builders are declining. The ratio between the two is also declining. And the relationship between the two is starting to get stronger. Then our long-term look, we have the NYSE on a monthly chart with the Copic curve. It's trying to turn back up here, and that could be positive. And then looking at the NYSE record high percent index, also coming back up even though it's shown some recent weakness. And the PPO on the S&P 500 also trying to turn back up. The S&P ratio to the CRB index also turning up. So these are much longer term trends that are starting to show some improvement. The S&P 500 to the global index monthly, the KST is still negative, but we're still above this red line, which is a 24-period moving average. Then another monthly chart of the S&P 500 showing how the CRB is starting to underperform as bonds are looking better. This is that same chart, only in inverse, showing how bonds are starting to do much better. Here's the CRB index starting to roll over on the monthly chart, and when you compare it to bonds, also starting to roll over. And then when you compare it the other way, looking at bonds, they're still showing some improvement. Here's another chart showing some improvement with bonds. The short-term KST is trying to turn back up, where the intermediate-term trend is still positive. An update of our possible positive scenarios. This could be a positive backdrop for the market. The Qs are outperforming the S&P. Discretionary showing some improvement, but not necessarily outperforming. Large cap growth is outperforming large cap value. Then when we look at our growth to value ratio, the large cap, the mid caps, and the small caps are outperforming. Then looking at the NYSE breadth thrust, we set a signal back in October 2022. We bounced up out of that, but now we're starting to come back down. This has a really good record in the long term, but it may be a nightmare just getting to some kind of positive return. At least that's the way it seems right now. Then looking at the percent of stocks that are above their 200-day simple moving average, we're starting to come back down. So this is showing internal weakness in the S&P. We're also seeing this with the 50-period moving average. We're seeing a decline here. And then with the mid caps also weakening and the small caps also showing some weakness. This is a positive sign that is now starting to turn negative. This is the 50-period exponential moving average of the new highs minus the new lows. After coming above the zero line and going up, it's now starting to roll over. Here's the indicator, which is the black line, and the longer it spends below zero, the more negative the red line becomes, and that's what we're really following. Then the 2-year Treasury yield, after coming up, has now been coming back down. Sometimes this will give some support to the S&P 500, the fact that interest rates are falling. We're seeing that happening right now, but it's not giving it an awful lot of support. Our staples to S&P 500 ratio, we have this coming back up, but we're still working off of this really high spike here. When this is going down, that often means that the S&P is going up, but we're just not seeing a lot of follow through. So what's positive? The value indexes and ETFs are positive. The big software companies, the euro, the Japanese yen, and the British pound, when you compare it to the dollar, copper, gold and silver, low volatility stocks, the Dow Jones Composite Average, FANG Index, bonds, that includes the ETF that we looked at, the high yield, the investment grade bonds, world bonds, corporate bonds, and junk bonds still have a positive trend. Staples, even though they're showing some recent weakness, are still in an overall uptrend. The tech sector and semiconductors, the high leverage loans, the small caps, mid caps, and the Dow, even though they saw a lot of weakness this past week. And here's the new addition, the NASDAQ and the NASDAQ 100, the NYSE Composite, as well as the Wilshire, all stocks, emerging markets, and then at the bottom is Bitcoin, which just gave us a recent golden cross. On the negative side, the list is getting shorter. The growth indexes are still negative. The CRB index, the dollar index, mega cap stocks, and then ARK. Thank you. I hope you found this helpful. Please feel free to check out the daily video and the weekly video that have already been posted. After this, I will be preparing the deep dive video where I look at a lot of charts that I don't talk a lot about from one week to the next. Then I'll also be preparing a supplemental video where I look at other charts that I get outside of what I design myself, just to see if we can get some insight from that. So I will talk to you in the next video.